Hi there, Lenny LaRocca with Vista Sotheby's here in Southern California. Today I'm going to be talking to my great friend Phil Atwan, who's an expert in 1031 exchanges. Phil, tell the group a little bit about yourself.
Well, hi everyone. I'm Phil Atwan with Exchang Resources. I specialize in 1031 tax-deferred exchanges. In some capacity, I've been involved with this business since 1982. So I know one or two things about it, and I'm really happy to share my thoughts and some information with you today, Lenny, and your viewers.
Fantastic. So today we're going to do something a little bit different. We're going to do a two-part series on the benefits of 1031 exchanges. Before we begin, I'd like to remind you about two links on my video blog. One, if you're looking to sell a home, click the appropriate link. And number two, if you're looking to buy a home, click that appropriate link. Now back to our subject. So Phil, thanks again for coming in today. So we got a couple of great questions that my viewers have asked. Question number one is, what motivates investors to sell and to re-leverage their investment properties?
Lenny, investors buy property for three basic reasons. Number one, to create cash flow. They want the property to work for them so they don't have to. And that's why they own a number of units, multiple types of different kinds of, whether it's residential or commercial property. The second thing is they want to have the property not only work for them and produce income, but they also want appreciation. They want the asset to be worth more in the future than what they paid for it. So they want to sort of have their cake and eat it too. The third item is they want a tax write-off. Why? Because when you create income from properties that are producing these checks for you each month, you have to pay taxes on that, ordinary income taxes, and they're looking for something called depreciation, which allows them to write off the asset so they can continue to reduce the amount of taxes they have to pay to the federal and the state government.
Great. And so Phil, another question that was asked me is, what does the 1031 tax-deferred exchange help me and investors to accomplish?
Well, there's two different things that it helps you to accomplish. Because you bought the property initially to create income, because you want it to be worth more, because you're looking for a tax write-off, as time happens and the property grows in equity, you want to re-leverage it so you can create more units that are going to create additional income. So you have more income coming from different sources. We call it different doors. Second thing is you want additional appreciation. You want to diversify the appreciation, the equity that's already grown into not only additional doors, but other properties that are actually going to be worth more in time. And then ultimately, as you buy up, you create additional write-offs of depreciation, which helps. So essentially, you want to redo what you've already done, but in a greater way. The second item is you want to do a 1031 exchange because it allows you to defer the capital gains taxes. Because when you sell a property, you have to pay long-term capital gains taxes up to 20%. You have to pay for the new healthcare tax, 3.8%. You have to pay the recapture depreciation tax at 25%, and the state of California at roughly 12.3%. When you do an exchange, you literally get to keep all those tax monies that you would normally pay and put it into the acquisition of better properties that will generate more income, appreciation, and hopefully, ultimately, more tax write-offs.
Fantastic. That's great. So if you have any additional questions or information you'd like either from Phil or myself, please feel free to call either Phil or myself. Our contact information is below. And thanks for watching.